Hello, welcome to the session. Let's wait for 2 or 3 minutes, let everyone join in, and then we proceed. All right? Yeah. Yeah, let's give it another 2 more minutes, and then we start off. Hi Puni, how are you? I'm doing great. Thank you so much. No, Puni, kal 6:30 I did not have a YouTube session. I had a special class. I was there. My YouTube sessions are from 3 to 4 or 4 to 5. I was there. My special class was there yesterday from 5 to 8:30 where my special class is. Yes. आप नहीं आए. Hi Anish, how are you? Nice to see you. We're just waiting for another 2 minutes for people to join, and then we start. Yes, Poonam, I got it. मैं समझ गया. आप नहीं आए कल स्पेशल क्लास में. I had my special classes yesterday from 5 to 8:30. Even today I have the special classes from 5 to 8:30. So please do join in. जी समझ गया मैं. हरियाणा वाली फ्रेंड. Yes, very nice. Okay, so even today we have पूनम. आज भी 5 से 8:30 बजे तक हमारी स्पेशल क्लास है. प्लीज ज्वाइन कीजिएगा. कल भी थी 5 to 8:30. आप नहीं आए. Okay, let's wait another minute. Okay, so please do attend this session as well today. जी फाइनल अकाउंट की. यस ठीक है. चलिए क्लास जी बिल्कुल. Okay, let's start off. Okay, welcome to Unacademy, India's largest online learning platform, and also welcome to Crack CA Exams with us, which is a vertical and channel of Unacademy, which provides which caters to the students of CA Foundation and Intermediate in their preparation and pursuit for the preparation of CA Foundation and Intermediate examination by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform that gives you a world of courses, resources, content, live and recorded sessions to help you in your preparation for the CA Foundation and Intermediate examinations. Alright, so welcome to the session today. Before we proceed, a little introduction about the educator today. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I'm an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and an associate member of the Institute of Company Secretaries of India. I'm also a law graduate from Karnataka State Law University and currently a practicing chartered accountant. I'm also a visiting faculty for CA subjects and an educator for CA students both offline and online. Prior to starting on my own, I worked with SR Bartley Boy and Associates, that's the Indian member firm of Ernst & Young Global in the Audit and Assurance Department, and Ernst & Young India, EY India, in the Mergers and Acquisitions Department. Post that, I worked with the Manipal Group in Bangalore as the corporate controller of their Indian entity as well as their German subsidiary. Located in Frankfurt, Germany, and it was only after I got back from Frankfurt, Germany that I decided to start something on my own, and that also gave me an opportunity to become an educator, which in turn gave me an opportunity today to take this session for you young, bright and enthusiastic CA aspirants. Thank you so much for this opportunity, and I hope you find the session useful. Anytime during the session, in case you have any questions, queries, observations or discussions to be made, please do not hesitate to drop in a line and I will try to solve your query or have that discussion with you as soon as possible. All right, and in case there's any feedback or anything you want to let me know, please let me know that as well. And there are many special classes and YouTube sessions that I've taken, so you need to look me up. One second. Just one second. You can look me up on YouTube with the name Prathik Gupta, Prathik. That's my name, and you will find all my sessions. You will find all my sessions on YouTube, which is there, which you can make use of for your preparations for the CA Foundation and Intermediate examination. Thank you, Poonam. Thank you for the compliment. Okay, so here's a little brief introduction about me, and all my YouTube sessions are available for you on the YouTube channel of Unacademy. So you need to just go onto YouTube, type Prathik Gupta, Prathik, and you can see all my sessions. Okay, let's proceed. Now, for those of you who are already on the Unacademy Learning app, I thank you very much. And for those of you who are not on the Unacademy Learning app, you need to go to your Play Store. Type Unacademy. Learning app, download it, install it, put in your mobile number where you will get an OTP, and using that OTP you can register on the Unacademy Learning app. Now what happens once you register on the Unacademy Learning app? The Unacademy Learning app gives you access to all the live and recorded special classes pertaining to your examinations that Unacademy has to offer to you in order to help you prepare for your CA Foundation and Intermediate examinations. And not only this, it also gives you access to all the live and recorded plus courses that Unacademy has to offer to you in order to enhance and accelerate your preparation for the CA Foundation and Intermediate course. So please go ahead, download the Unacademy Learning app from your Play Store, enter your mobile number, enter your OTP, and register on it as soon as possible, and also bring in a lot of people to register on it who might benefit from the resources that Unacademy has to offer to you. All right, so I look forward to seeing all of you there. Now, like I told you, just one second. Now, like I told you, that there is a plus platform of Unacademy, which is a premium platform of Unacademy, which is a payment-based subscription model, which provides you various subscription packages for the examination. So the CA Foundation and Intermediate subscription packages provided by the Plus platform of Unacademy are as follows. the packages provided are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package costs you rupees 3,500. The 3 month package costs rupees 8,750. The 6 month package costs rupees 14,000. The 12 months package costs rupees 17,500. And the 24 months package costs rupees 21,000 rupees. Now, please remember, these are all the list price. Now, before you make the payment for the package of your choice, please do not forget to use the code Prathik, which is PRATHIK, to get an instant discount of 10% on the above listed price. So I repeat, do not forget to use the code Prathik, PRATHIK, to get an instant discount of 10% on the above listed price. So the after discount price of the various packages are: the 1 month package will cost you rupees 3,150, the 3 month package will cost you rupees 7,875, the 6 month package will cost you rupees 12,600, the 12 months package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see immediately there is a discount of 10% that you get on the above listed price when you use my code Prathik. Right now, I personally suggest you to start off with the at least 12 months package because of two reasons. Firstly, it is cost effective. If you observe the per month cost of the 12 month package and compare it with the per month cost of the 1 month package, you will see there is great savings almost immediately. And secondly, and most importantly, since the CA Foundation and Intermediate subscription package is provided to you in one package, a 12 month package will be very helpful to you because Normally it takes about a year's time for you to prepare and clear the CA Foundation and Intermediate examination. So if you're getting a package that covers both the courses at a very cost-effective price, that will be very beneficial for you. Okay, so having said this, you're free to choose the package of your choice. But please do not forget to use the code Prathik to get a discount of 10% on the above listed price. Alright, you can also avail the benefit of a no-cost EMI option available on the 6 months, 12 months, and 24 months subscription packages, just in case you do not wish to pay the entire amount at one shot. The payment modes available are debit card, credit card, and net banking. So please go ahead, make use of this opportunity and get onto the Plus platform as soon as possible in order to enhance and accelerate your preparation for the CA Foundation and Intermediate examinations. Please take a minute, go through this, and then we proceed. Any questions? Please ask. Any questions? Please ask. Take about 30 seconds more. Yes, Poonam. Just give me 10 more seconds. All right, let's proceed. Now, like I told you, the Unacademy Learning app gives you access to all the special classes, live and recorded. Here are the snapshots of few of the many special classes that I've taken on the Unacademy Learning app for your reference, so that you can go on to the Unacademy Learning app and make use of it. And this is how it appears. All right, so I've taken special class on the revision test papers, the Sale of Goods Act, the Indian Contracts Act, the Companies Act 2013, and many more, like preparation, like accounts of not-for-profit organizations, final accounts of non-manufacturing entities, partnership accounts, and many more, which are there for your use and for your reference. So please go on to the Unacademy Learning app and make use of it. And in case you have any questions, you can always get back to me. All right. Hi Advait, hi Divya, how are you all? Nice to see you. Okay, let's proceed. And also here I've given you the links to few of the many special classes that I have taken on the Unacademy Learning app. You can either copy paste these links on your browser, or you can click on these links to directly take you to the special class on the Unacademy Learning app, so that you can go through it and gain from it. And after that, if you have any questions, you can always get back to me. So the special classes taken are on the Indian Contracts Act, Sale of Goods Act, Indian Partnership Act, Limited Liability Partnership Act, the Companies Act, Basics of Communication, accounting concepts, and revision test papers on business laws issued by the Institute of Chartered Accountants of India. Now please remember, the entire business law syllabus of your CA Foundation is there on the Unacademy learning app in the form of special classes. So please go ahead and make use of it. It's all there, including the revision test papers, mock test papers, suggested answers and everything. And also for the intermediate students, your entire Companies Act 2013 is there on the YouTube channel of mine, Prathik Gupta. So please go ahead, make use of it. And in case you have any questions, you can always come back to me. In the meantime, yes, Advait has a question. सर कल की क्लास में क्या पढ़ाया था सर? मेरा डेटा बैलेंस खत्म हो गया था, इसलिए मैं क्लास अटेंड. दैट्स ओके अद्वैत, आप डेटा बैलेंस अगर अभी हो गया हो तो आप प्लीज गो थ्रू दैट सेशन. वी डिड वर्क आउट अ फ्यू प्रॉब्लम्स. इवन टुडे वी आर गोइंग टू वर्क आउट सम प्रॉब्लम्स. ओके, राइट? All right, so today we are going to start off with the concept and accounting for depreciation part 1. The schedule for this depreciation is something like this. Today is part 1. Tomorrow at 3 p.m. will be part 2, concept and accounting of depreciation part 2. And day after tomorrow, that is on Thursday, the concept and accounting for depreciation part 3 at 4 p.m. Okay, and also my plus course is starting on day after tomorrow on revision on companies accounts 2013. From October 22nd to 31st. So please be there as well. All right. So my schedule is today, tomorrow, YouTube 3 p.m. to 4 p.m. Day after tomorrow, YouTube at 4 p.m. And today special classes are from 5 p.m. to 8:30 p.m. Tomorrow special class is from 5 p.m. to 8:30 p.m. All right. Okay. Can we proceed? Okay, so let's start off with the simple discussion of what is the meaning of depreciation. Depreciation is the decrease in the value or the expired portion of the cost of a fixed asset. It's called depreciation. Depreciation is due to usage, wear and tear, obsolescence, etc. Depreciation is a process of allocating the cost of a fixed asset over its estimated useful life in a rational and systematic manner. Okay, now what does this mean? Just let's look at the slide and let's discuss what does it mean. Now, just one second, let me have some water. Okay, now simple words, depreciation is the decrease in the value of an asset due to wear and tear, obsolescence, usage, passage of time, etc. It means any asset you purchase, okay? Any asset you purchase over a period of time, other than land, all other assets are depreciable assets. That means over a period of time, their value keeps diminishing, and there is no particular reason for that. Just the mere fact that you're holding an asset, the value becomes lesser and lesser. It could be due to usage, it could be due to wear and tear, or it could be due to obsolescence. Obsolescence means outdated. Okay, it becomes outdated, like especially in the technological segment. The assets get outdated because they are become depreciated because they are outdated. There is no more value for them. Okay, and depreciation is also is a process of allocating the cost of a fixed asset over its estimated useful life in a rational and systematic manner. It's AS6. Depreciation is AS6. Okay, Poonam? AS6 is for depreciation, accounting standard 6. All right. So depreciable assets are assets that are expected to be used for more than one accounting depreciable period, assets that have a limited useful life, and assets that have been held by an enterprise for assets use in the production or supply of goods and service for rental to others or for administrative purposes, and not for the purpose of sale in the ordinary course of business. Now please pay attention to this slide. This slide simply says, firstly, depreciable assets are those assets which are expected to be used for more than one period. All right. So normally you provide depreciation only on those assets which are supposed to be held for more than 1 year. Okay, any assets that are supposed to be held for more than 1 year are normally depreciable assets. Okay, and if you're going to be using it only for less than 1 year, then you cannot call them as depreciable assets. That's the first point what it says. They have a limited useful life. Now obviously assets cannot have an unlimited useful life, right? Let's take for example your mobile phone. Now I'm sure today's generation gets bored with a mobile phone in 6 months to 1 year. Even though the useful life of a mobile phone is taken as 5 years or 3 years, but how many of us actually end up using the mobile phone for more than 1 year or 2 years? Very few, right? So this is a limited useful life. Now the same mobile phone that you purchased 5 years ago, can you use it today? Now even though everything is working, there might be no problem with the phone and everything is working, but still because of 3G, 4G, 5G and these various new apps coming in, the internet speeds and everything, they become outdated, right? So that is the reason why they say assets have a limited useful life. Your mobile phone might still be working with you in the cupboard, but can you really use it today? Or would you like to use it today? No, right? You will not like to use it today. So a limited useful life simply means not that after 2 years, 3 years or 5 years the asset has become into pieces, that it becomes absolutely useless. No, the usefulness of the asset becomes limited. Okay, so are you getting the point? Yes, Poonam, non-current assets. Okay, so that's why the depreciable assets are known to have a limited useful life. The third point, assets held by an enterprise for assets used in the production or supply of goods and services for rent and services, comma, for rental to others or for administrative purposes and not for the purpose of sale in the ordinary course of business. So let's say you are into the business of buying and selling tables. Okay, so if you buy, let's say you buy a computer. Now obviously you're buying a computer to use it for the purpose of business, right? So that means for services. You're not using it to buy and sell computers, correct? So in that case, depreciable assets are always those assets, firstly, that are held by an enterprise for use in production or supply of goods and services, or for rental to others, or for administrative purposes. So the example I gave you about computers will fall under administrative purposes. But if you're doing a business of buying and selling computers, then in that case, that will not be a depreciable asset. That will be a stock in trade. Are you getting my point? So basically that asset should be used by an enterprise for production or supply of goods and services, or either giving it for rent to someone or simply for administrative purposes, but not for the purpose of sale in the ordinary course of business. Yes, what does Advait say? Depreciation is always charged on fixed and tangible assets, not in current assets. Of course, very right, Advait. And Poonam says intangible assets is amortization. Perfect, Poonam. Okay, please take a minute, go through the slide. Any questions, please ask. Any questions, please ask. Any questions? Anyone? Any questions? Okay, let's proceed. Now, what are the causes of depreciation, right? Now, this is causes of depreciation. Firstly, wear and tear. Okay, wear and tear simply means usage. Now, if you buy an asset and you keep on using it, obviously, then you cannot say that, oh, it is brand new and whatever price I bought it at, I want to sell it at the same price. No. The very fact that you've used it and this thing, it becomes second hand, as they call you. And for second hand, you do not get the exact same value, and there's always a loss in the value of an asset. All right, got it? So that is due to wear and tear. Now let me give you an example. Let's say if today a person goes to buy a car, okay, in a showroom, and he enters the showroom, looks around the showroom, looks for various cars and everything, and one car he particularly likes it, okay, and he asks the person how much is the car for. They are like, so it's 15 lakhs. He's like, okay, done, and he gives the check for 15 lakhs, sits in the car, okay, and he's like, okay, I'm buying the car, and he buys the car. Now he's paid 15 lakhs for the car. He just takes the car reverse out of the showroom, and as soon as he comes out of the showroom, he's like, no, I don't think I want this car, let me look for another car, and he takes it back into the showroom, and he says, no, I just paid you 15 lakhs about 5 minutes back, and I don't like this car now, and I want another car, so please give me my money back and take this car. Now, do you think the showroom is actually going to give him that car or give him the money back? No, they'll say, okay, sir, take it back, but we'll pay you about 14 lakhs 50,000 for it, or 14 lakhs 70,000 for it. Simply because now it has become a second-hand car. You bought it, this thing, now it will be a second-hand car. Even though he did not use it for more than 5 minutes, it has become a second-hand car. So that is how the value of the car reduced, or there is a loss in the value of the car. Everyone got it? Any questions? Now, second is time effluxion. Now, time effluxion simply means by the passage of time. And let's say you bought a car, a brand new car, and you went to your house and you put it in the garage and you covered it with a cloth. Okay, and you did not use it for the next 6 months. Even though you have not used it, that means you have not even used it for, like, say 10 kilometers. It's been in your garage in the last 6 months. So after 6 months, you pull out your car and you're like, okay, it's a brand new car, I have hardly used it, and this thing, let me sell it off. But because the passage of time has happened, there is a loss in the value of the car. So even though you have not used it for more than 10 kilometers in the last 6 months, it's a brand new car, you just took it to your garage and covered it and kept it, you will still not get the same amount of what you paid for it. There will be a loss in the value of the car. That loss in the value due to passage of time, even though you've not used it, is also called depreciation. Are you clear? Any questions? Any questions? Any questions, please ask. Anyone? Okay, now let's look at the third one, obsolescence. Like I told you, technological changes. Now, when mobile phones had come, yes, Advait, 6 months का depreciation पूरा लगेगा. Income Tax Act में पूरा 1 साल का depreciation लगेगा. ठीक है, इवन दो आपने गैराज में कवर करके रखा, सब रखा, बट डिप्रिसिएशन लगेगा. ठीक है अद्वैत, एनी क्वेश्चंस प्लीज आस्क. ठीक है. Now let's look at technological changes. Now let's again look at example. Today we are in 2020, right? Now when mobile phones had come, they were those huge mobile phones, right? Like your cordless phones or bigger than your cordless phones. But and they only had a feature of either sending an SMS or receiving calls and making calls, right? Now, if you still, at that time Panasonic or some mobiles were there, right, initially. So if you still have those mobiles, now today, do you think if you go out to sell in the market, you will get the same price for it? No, because simply they are technologically outdated. Those mobiles are not used today. If you put a today's SIM card into that phone, for all you know, it might not even work, because the SIM card itself have technologically much superior to those mobile phones. So that logic applies to everything. And in fact, not if you're talking about the origin of mobile phones, and now that is about 18 years or 19 years ago in India. Or let's take for 2 years itself, right? Now I have a mobile phone with me. It's very well and it's nicely kept. But the only reason I'm not able to use it is because it does not support 4G. It was supported only 3G. So that makes it technologically outdated. So then there is a decrease or fall in the value of that mobile phone. So that is what you mean by obsolescence or loss in the value of an asset due to technological changes. Are you clear? And this not only applies in mobile phones, this applies everywhere. It applies on your computers, it applies on your maybe cars. The latest technology keeps coming in, and it applies on televisions, on any electronic gadgets or any this thing, that logic applies, that they become technologically outdated. Okay, any questions? Any questions? Okay, now the fourth one is depletion. Now depletion means what? Like the heading says here, natural resources. Now depletion is a method that certain assets which the value reduces due to what we take from it. Bikes also. Yes, Sadhvet, bikes also. Yes, yes, but still, there are certain bikes which increase in a value over a period of time, like your Yamaha. Okay, Yamaha RX 100, Yamaha RX 135. I mean, I'm just telling on a lighter note. Even though these also have a decrease in the book value of these assets, but today people still want to go ahead and buy a Yamaha RX 100, RX 135, or an RX Z. Okay. बिल्कुल पूनम bikes भी. Okay, so even bikes also lose value due to technological changes. Yes, like for example, a bike which was 20 years ago that did not have an auto start option, or 10 years ago, right? Now they had only a kickstart option, but today most of the motorbikes that come in are all auto start. In fact, even an Enfield, a Royal Enfield, what you had about 10-20 years ago, even though those bikes were good and sturdy and maybe much better in quality than today, but they did not have a press start button. Okay, so you had to kickstart. But today even a Royal Enfield has a push start button. A Java bike, the Java bike has been relaunched again, right? Those used to be good bikes in 80s, 90s. Then it stopped, and now Java bikes have come again, and those are self-start, because Java bikes don't have kick starts, I think. Yes, so this applies everywhere. Okay, Advait, answered your question. Any questions? Any question? Okay, so now the last cause is depletion. Now depletion is applicable basically for assets such as mines, okay, which loses its value as you keep extracting natural resources from it. So it could be a gold mine, a silver mine, a coal mine, or whatever mine. Okay, so natural resources. So as and when you keep extracting resources, the value keeps on decreasing or depreciating. Okay. Yes, Poonam, what are you saying? Because these are assets and assets depreciate, it may be bike spawns extra. Yes, Poonam. Okay, Advait, clear? So depletion is on those assets which are filled with resources, and the more you keep extracting the resources from them, the more they lose value. Okay, any questions in these 4 points? Please ask me. Any questions in these 4 points? Please ask. Any questions? Advait, Anish, Poonam, Divya. Any questions? Okay, now let's look at another important part, that is your objectives of depreciation. Now, why do we charge depreciation? Okay, the prime objectives for providing depreciation are correct income measurement. First one, depreciation should be charged for proper estimation of periodic profit or loss. In case an enterprise does not account for depreciation on property, plant and equipment, it will not be considering loss in value of property, plant and equipment due to their use in production or operations of the enterprise, and will not result in the true profit. Now, if you remember, we did the chapter on final accounts of companies, right? So we spoke about a matching concept, right? So in whichever period we are earning the money, whatever costs have been incurred to earn that money, that also has to be recorded in that period itself. Yes, we agree? Correct? Now, so if you have used the machinery to manufacture certain tables and sold it. So don't you think even that depreciation or that loss in value of that machinery should be recorded as a cost in order to complete the matching concept? Yes. So in order to get the correct income or correct profit or loss of an entity for a particular period, it's very important that you charge the loss in the value of an asset to the profit and loss account according to the matching concept, and that will result in true profit or loss for the period. Is this clear? Clear? Any questions? The first point? Any questions? Please ask. Okay. Now we go to the second one. True position statement. The value of property, plant and equipment should be adjusted for depreciation charged in order to depict the actual financial position. In case of depreciation is not accounted for appropriately, the property, plant and equipment would be disclosed in the financial statements at a value. Okay, so this part, the first one was talking about profit and loss account. Now this part is talking about balance sheet. So it simply says that if you do not, I will answer your question, Poonam. So the second part simply says that if you do not record depreciation properly in the books of accounts, or the loss in the value of an asset properly in your books of accounts, then your balance sheet will not show the assets at their true value. Okay, that means they will be disclosed at a value higher than their true value. So if you've bought a car for 1 lakh and you do not provide depreciation on it at 10% year on year, so it will keep appearing in your balance sheet at 1 lakh, which is incorrect. It should keep appearing at 90,000, then 81,000, then 72,000, and so on and so forth. Got it? Okay, we have a question. Poonam says, does depreciation affect cash profits? Of course not, Poonam. Depreciation is a non-cash expense, so it will not be affecting your cash profits. Okay, because when you provide depreciation, you do not pay anything from your pocket. ठीक है पूनम, समझ गए? Got it? Poonam, have I answered your question? Okay. Let's proceed. Point number 3. Funds for replacement. Generation of adequate funds in the hands of business for replacement of the asset at the end of its useful life. Depreciation is a good indication of the amount an enterprise should set aside to replace a fixed asset after its economic useful life is over. However, the replacement cost of a fixed asset may be impacted by inflation or other technological changes. Okay, so the fourth point says funds for replacement. So every year, if you set aside a little bit of the amount for the cost of the asset, at the end of the useful life of the asset, you will have enough money so that you can replace the asset with a new asset. That's what this funds for replacement means. Okay. Funds for replacement. Generation of adequate funds in the hands of business for replacement of the asset at the end of its useful life. Now, please take 2 minutes, go through this slide. Any questions, please ask me. Any questions, please ask me. Take 2 minutes, go through this. Okay, Poonam, what about the others? Go through this. Any questions, please ask. Okay. Okay, now the last point, the ascertainment of true cost of production. For ascertaining the cost of the production, it is necessary to charge depreciation as an item of cost of production. Okay, so as machinery is the unit of production, now the depreciation that is charged on the machinery has to be included to get the actual cost of production. That's what the last fourth point talks. जी पूनम बिल्कुल आ सकता है. Okay. Let's proceed. Now, the notes on depreciation. Now please remember, these are few things you need to note when we are dealing with depreciation. Firstly, it is a non-cash expense. Poonam, this answers your question. Depreciation is a non-cash expense, which simply means that when you provide depreciation in your books of accounts, you're not paying anything physically in cash. It is the loss in the value of an asset. So it is a non-cash expense. So you just provide it and you benefit it. Okay, now according to income tax, even if you have certain assets and you do not provide depreciation, you are supposed to provide depreciation. The department will tell you to provide depreciation. Same to do with the Companies Act also. The Companies Act says that a private company can declare dividends only after it provides for losses and depreciations earlier. Okay, so firstly, it is a non-cash expense. Second, it is a charge against profit. It is a charge against profit means it reduces your taxable profit. So it is a beneficial thing for you, charging depreciation. Third one, it is a source of fund for replacing an asset. We discussed it in the previous slide. Every year, if you keep setting aside a little amount, then at the end of the useful life of the asset, you can have enough money to buy the new asset or replace the asset. Okay. The last one, depreciation is calculated on using the cost of the asset. Okay, so this is simple. Depreciation is always calculated using the cost of the asset. Now, what is the cost of the asset and everything we will see as we move on. Any questions in this? In these 4 points? Any questions? Okay, now we look at the factors to calculate depreciation. Now, please remember these are 3 important factors to calculate depreciation. Okay, the first one is your cost of the asset. Okay, that means we need to find out what is the cost, because depreciation is always calculated on the cost of the asset. So it's very important to find out what is the cost of the asset. The second is estimated useful life. Now, a lot of acts, okay, like your Income Tax Act and your Companies Act gives you the estimated useful life of an asset due to some research and everything. So they give you. Otherwise, you need to find out the estimated useful life of an asset. The estimated scrap value. What is the scrap value? Like the term scrap value says, when you, at the end of the useful life of the asset, when you sell it out, when it's no longer useful to you and you sell it as scrap, it will get some amount. It may be a small amount, but it will realize some amount. That some amount is known as scrap value. Okay, so the depreciable value is equal to cost of asset minus estimated scrap value. So for example, if cost of the asset is 10 lakhs and estimated useful life, estimated scrap value of the asset is 1 lakh, then your depreciable value is 9 lakh rupees. So on 9 lakh rupees, we will calculate depreciable. We will calculate depreciation. Are you clear? Any questions? Any questions? Any questions? Please ask. What is FIM, Advait? Fixed installment method. Is that what you're talking about? Exactly, Advait. What is FIM? Fixed installment method, yes, that is also known as straight line method, SLM method, but it's more popularly known as SLM method. Okay, then now let's talk about the first component, the cost of the asset. Okay, now the cost of property, plant and equipment comprises of, this is an important one, please note, comprises A, its purchase price, including non-refundable import duties and purchase taxes after deducting trade discounts and rebates. So let's say you contacted some person. Okay, Anish, no problem. Okay, so let's say there was some machinery or something which you had to buy from China, or no, sorry, wrong country right now. No, you're not China. Let's say you had to buy it from Australia or somewhere. Okay. So then whatever you negotiated the price with them, whatever is the price you paid to them, along with non-refundable import duties and purchase taxes, all that will count in the cost of the asset. Okay, that is the first point. So let's say you decided and you bought the machinery for 10 lakh rupees, plus you paid an import duty of 1 lakh, plus you paid a purchase taxes of 1 lakh. So 10 lakhs plus 1 lakh plus 1 lakh, 12 lakh will be its purchase price. Okay, are you clear? Second, any cost that is directly attributable to bringing the asset to the location and condition necessary for it or to be capable of operating in a manner intended by the enterprise. So that machinery from Australia came to the Chennai port. Okay, but now you wanted that machinery in Bangalore. So from the Chennai port to Bangalore, you got it transported, right? So the transportation cost, trucks, lorries, whatever, that machinery, to bring it to your warehouse or to bring it to your factory in Bangalore. So that transportation cost from the Chennai port to the Bangalore factory will also be included in the cost of the asset, because that cost is necessary for bringing it in the current condition or in a manner intended by the enterprise. Are you clear? Then the initial estimate of the costs of dismantling, removing the item and restoring the site on which the asset is located. So the item came to this place, Chennai port. From Chennai port it came down to Bangalore. In Bangalore it was assembled or installed. So for installation you paid a price. So whatever installation price you paid, that amount will also be included in the cost of the asset. Are you clear? Yes? Okay, then examples of costs directly attributable are cost of employee benefits arising directly from acquisition or construction of an item of property, plant and equipment, cost of site preparation, initial delivery and handling costs, installation and assembly costs, costs of testing whether the asset is functioning properly after deducting the net proceeds from selling the items produced while testing, professional fees, engineers hired for helping the installation. So all these are few of the costs that are directly attributable to the cost of the asset. So all these will be added to the cost of the asset. Please take 2 minutes, go through this. Any questions, please ask. Any questions, please ask. Yes, Anish, according to AS 10 as well, right? But depreciation is as per AS 6. Okay, go through this. Any questions, please ask me. Yes, Poonam, what's your question? Yes, Poonam, what's your question? Yes, see now if you, now when you install the machinery, obviously you will test it and try it, right? There will be a trial. So in case after the installation there is any trial expenses or testing expenses, those will also be included in the cost of the asset. Okay, trial will also be part of installation, right, Poonam? Okay, any more questions on this? Any questions, please ask. Okay, any more questions, anyone? Before we proceed, you need to be very clear about this, about the cost of the asset. Yes, Anish. Yes, AS3, AS6, AS26, AS10 is all there. Yes. Okay, so you're already very well versed with it. Huh? Anish knows everything about this. Nice. Anyone else has any questions? Yes, Poonam. Expenses on reducing working expenses, revenue expense hai kya? What is that, Poonam? Can you explain that to me, please? What is expense on reducing working expense? What is that, Poonam? Okay. Okay, shall we proceed? Or does Poonam have a question? Poonam, what I didn't understand what your question meant. Expenses on reducing working expenses. Yes, you can treat it as a revenue expense, Poonam. Yes. Okay. All right. आप भेजेगा वो क्वेश्चन भेजेगा मुझे आप पूनम. Okay, now we look at the methods of calculating depreciation. Now here are the 7 methods of calculating depreciation, which is straight line basis, SLM basis, written down value method, annuity method, sinking fund method, machine hours method, production units method, and depletion method. We will be solving problems for each method, okay, in the due course. But please remember from the understanding and this point of view also only, the straight line method, written down value method, maybe the machine hours, production hours, and depletion hours is important. The others are not very important. All right, so we will be working out problems on these. So like the name says, straight line basis is when you charge a fixed amount of depreciation every year, irrespective of anything. So if it is a 1 lakh, if it's a 10 lakh rupee machinery and the useful life is 10 years, so 10 lakhs divided by 10 years, 1 lakh every year will provide as depreciation. Written down value is where every year the value on which you charge depreciation reduces, and the depreciation amount also reduces. Annuity method is using the annuity tables again. Sinking fund method also. Machine hours is a method in which you depreciate based on the machine hours, estimated machine hours of the machine. Production units is again based on the production units capability of that machine. And depletion method, like I told you, is for mines where there are natural resources, and the more we keep extracting from them, the more depreciation is charged. Okay, so these are the 7 basic methods of depreciation. Out of this, which we will be focusing on 4 or 5 methods. Okay. Now, straight line method, also known as the fixed installment method. Yes, Advait, this was your question. Or the original cost method. The depreciable value is written off over the useful life and reduced to nil, which means if the cost is rupees 10 lakhs, estimated useful life is 10 years, okay, so then the depreciation each year will be 10 lakhs divided by 10, which is equal to rupees 1 lakh, and in 10 years time the value of the machinery will become 0. Okay. All right, then an amount equal is charged as depreciation, the P&L every year. Depreciation amount is equal to cost minus scrap value divided by estimated useful life. Okay, applicable for assets that have insignificant repairs and maintenance. So this, please remember, the straight line method is applicable or used mainly for assets that have insignificant repairs and maintenances. Please take a minute, go through this, and then we proceed. Any questions, please ask. So Anish, which are the methods that have been removed from your syllabus? Yes, Anish? Okay. All right. So in case you have any questions on this, let me know. So Anish, which are the methods that are removed from your syllabus? Okay, so if there are no questions, if you have no questions on this, then this session, today's YouTube session, we will be ending with this. Tomorrow we will do it at 3 p.m. to 4 p.m. We will start working out problems. And then again, the next YouTube session is on day after tomorrow from 4 p.m. to 5 p.m. The next is our special class today at 5 p.m. 5:15 p.m. to 6:15 p.m., 6:30 p.m. to 7:30 p.m. and 7:45 p.m. to 8:45 p.m. All right. Any questions? Please ask.